Welcome back. Our corporate conversations continue now. GNA Axles is the next management on the show after its quarterly earnings, as well as a 400 crore rupee capex that has been approved. To discuss more on the numbers and the road ahead, Ranbir Singh, the MD and CEO at GNA Axles, is joining us. Mr. Singh, good morning. Thank you so much for joining in. I'd like to start off by asking you about your mix this time around with the domestic and the exports. If you could share a breakup of that and which segment during the quarter did better this time around.
Very good morning. Thanks for inviting me today on this show. We are at present, the first two quarters, first half we have closed, and our top line was almost equal to last year's top line. And this bottom line is also almost maintained. As per the requirement in the North America, Europe and domestic market, especially the off-highway is quite slow. As per the retail sales for the off-highway in India, tractor sales has dropped by 8% as compared to last year. And it's just keeping in view of the festival season, they have built up the stocks over 70,000 tractors in the market. So we were our sales in the domestic market has dropped, and on which we have covered from North America and South American sales. If we see the European market, Europe, because of the disturbances and the inflation, the overall drop in the CV market is around 17%.
Okay. So the key problem is the domestic sales, which fell by 8% in the current quarter, and that's the reason why your revenues have been on the flattish side, right?
That's absolutely right. But we were they drop in the sales in domestic as well as in the European market, but it is covered from North America and South American sales.
Got it. So for H2, what can you guide in terms of domestic sales in Europe? Will it continue to contract? Will we continue to see a single-digit kind of a fall in your revenues for the second half of the year in domestic and off-highway and plus Europe? And what about North America and South America? What's the growth that you expect in the second half?
Even if the sales in the domestic market will not improve, but we will be able to match our second half equivalent to first half or slightly better. The reason being the North American Class 8 requirement is quite up because after 2 years, we are going to change the norms of the engine norms and emission norms. So because of that, they are building the inventories over there. So it can compensate our sales, whatever drop will be there from Europe and from domestic market.
A drop in revenues in Europe and domestic markets in second half?
There is no chance of improvement. But
no chance.
Yeah.
Mr. Singh, I just wanted to ask you that very question, right? Because of the issues in Europe that have been flagged by Stellantis and BMW and all the other such auto companies with the recalls as well. How much of your business has been impacted because of that? If you could put a number, so you've already mentioned that there is no chance of an improvement, but how much of your business is likely to be impacted because of this?
Fact is that our dependency upon percentage is very minimal. That is the SUV segment. That is hardly less than a 5%. But we are having good visibility for those kind of areas in passenger vehicle for North and North American market. So far in Europe, because of recalls, our business is not at all affected.
So then, what about your capex plans? You've outlined a capex plan of 400 crore rupees, which you will invest over the next 3 to 4 years. What would be the peak production of this, therefore the peak revenues? Does it come on stream 4 years later? And how will you fund it, sir?
Reema, about this 400 crore capex, which we have taken clearance from the board, the allocation of the funds are going to be like that, over around 50% will be invested for renewable energy, that is mainly for the solar, and part of that will be invested for EV new component development, and keeping the vision for 2027-28 for the EV component research and development and its manufacturing and prototyping and so on. And the rest of the funds are for the augmentation of our existing plants, where we want to create more flexibility and want to increase the efficiency. Those funds will be utilized, and after these fund deployment and all, we are targeting from next year onwards 8 to 10% growth.
You mean 8 to 10% growth for FY26, if I heard that correctly, Mr. Singh?
From 27 onwards, we are targeting 8 to 10%, but by 2028, our revenue over 10% we are targeting out of EV components.
All right, Mr. Singh, thank you so much for sparing time and sharing with us your views on the road ahead. Wish you good luck for the second half of FY25. The management of GNA Axles, the stock at the lowest point of the day, 1.5% lower at 416. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned.